In today's video, we're going to discuss Michael Burry's portfolio and particularly what stocks he was buying leading into 2023. The private prison company Geo Group, which was 37 of his portfolio last quarter, has now been trimmed to 25. He also completely sold out of Core Civic, another private prison company that he bought in Q3, and he also reduced 70 of his Curate retail positions, which was his number 2 stock in the last quarter. With that said, have a look at what comes in the door. A 150,000 share position in Black Knight, 150,000 share position in Coherent, a 50,000 share position in Alibaba, a 75,000 share position in JD. Then he also bought into Wolverine Worldwide and MGM Resorts and Sky. It's not even the biggest new buy in his portfolio, but let's zoom in on Alibaba and JD.com. Michael Burry's buying Chinese tech, and it's actually not the first time he's done that. Back in Q1 of 2019, he bought JD.com, and in Q2 of 2019, he bought Alibaba. So he actually isn't a stranger to these businesses. It would have been this drop that would have touched him back into JD with the shares diving to 37 in Q4, and it was probably the same thing around here with Alibaba, with the shares down around 64 in Q4. It seems like very much a case of just getting a very attractive price in the short term and taking advantage of it. Besides, Burry's probably absolutely nailed the timing on these stocks because if you have a look, both of them have had very solid ball runs since. But what's the biggest takeaway here? It's quite simply that Michael Burry feels comfortable with buying Chinese tech, joining the long list of super investors that have come to the same conclusion despite all of the media reports. You know, there's been fears of potential deer listings last year, there was concern about dodgy accounting, but also more generally, there were concerns surrounding the tensions between the US and China. Now, we do know that a lot of the news is fairly behind us, especially with the PCAOB being able to check over the audit data from these Chinese companies. That was a very big step. But there's still a lot of concern with these Chinese stocks simply due to the economic landscape over in China. You know, in 2022, economic growth slowed from 8.4% to just 3%, largely on the back of their strict covert policies. However, as this research report noted, weaker global demand and rising geopolitical uncertainty is still a cause for concern. What's been really interesting is watching the raft of super investors such as Charlie Munger, Monash Spear, Ray Dalio, Bill Miller, and so on actually step up to the play and invest in Chinese tech during this time period. Now, we can also add Michael Burry to that list. Although one thing to note with these Chinese businesses is that you really do need to have a very long-term investing outlook to consider these businesses. If we turn to simply Wall Street, you can see that just based on their current performance and their current estimates, their discounted cash flow model shows Alibaba actually sitting around fair value. Tencent also comes up around fair value, although interestingly, they do note that JD.com looks significantly undervalued at the current time. Of course, that doesn't just mean you go out and buy it. This is purely an exercise in idea generation, and those tools just give you a hint of businesses you may want to go in and research yourself. Now, moving on to the 2 bigger buys from Burry in Q4, coming in at 11.31 of the portfolio, we have Coherent Corp. So Coherent is a $6 billion company listed on the NASDAQ. They actually changed their name last year from 26 Incorporated to Coherent after making the acquisition of Coherent, and their business is centered around 3 types of products: semiconductors, networking, equipment, and lasers. Interestingly, the stock went down about 60 from its peak in 2021 after they announced that they wanted to buy Coherent. That deal was finally complete in the middle of last year, but what's funny is that somehow, yet again, Michael Burry seems to have timed the market to perfection. Somehow, Burry's just nailed it. In fact, he's probably sitting on about a 40 gain if he still holds the shares today, because the shares have just been on an absolute tear since late last year. Also, if we turn over to Simply Wall Street and look at their discounted cash flow, it seems to suggest that this business is actually quite overvalued for what they're at right now. So this play by Burry could simply be a short-term trade, or he might be buying with a longer-term thesis around the future of semiconductor manufacturing and laser technology. Only time will tell. Lastly, his third big notable buy was in Black Knight Inc., which now slots into second spot in his portfolio, occupying about 20. Black Knight is a company that provides software that allows banks and mortgage lenders to streamline the home loan process. So their software helps manage and process home loans. It also helps to handle customer documents and information, and also make sure that everything's secure and compliant with the regulations along that process. Interesting thing about Black Knight is that a lot of investors aren't currently buying it for the business, and this is because Intercontinental Exchange is currently looking to acquire Black Knight. They're committed to buying Black Knight at $13.1 billion, but currently the market cap sits at $9.92 billion. So that's a potential 32 upside if the deal does go through. Currently, the deal's being held up by regulators who have expressed concerns over antitrust, so we can look at the business on simple Wall Street right now and do some analysis, but at the end of the day, Burry's bet on this company would definitely be around this acquisition going through. The resolution's expected in over the next few months, so we'll just have to wait and see whether this one turns into another good pick by Michael Burry or not. So overall, that's Burry's big buys headed into 2023. However, with that said, there's definitely a few things to be aware of with Michael Burry's 13F filings. The first thing is that the 13F filings simply show us his U.S. equity positions. It doesn't show you how much cash he's got sitting on the sidelines, and it also doesn't show you his short positions. For example, in Q1 of 2022, his portfolio was worth $165 million. He had $165 million invested. At the start of 2023, he only had $47 million invested. So he's got about $118 million that's currently not invested long in U.S. equities. So this could be in short positions, or it could just be sitting in cash, which all of a sudden paints a much more bleak image of what Burry actually sees for the future of the market. You know, $47 million invested, $118 million just sitting on the sidelines, or shorts. So with these 13F files, you really have to remember to zoom out and think of the bigger picture. And this bigger picture for Michael Burry would be very consistent with what he's been tweeting about lately. So we know from past tweets, Burry's been very bearish on the market. On the 1st of February, he released a tweet telling people to sell, and a few days earlier, he likened our current market situation to the tech bubble, hinting that we're probably only halfway down the slope. So the point is, we definitely have to be careful when reading these 13Fs, and we just use them as a potential ideas list of companies that maybe we'd like to do a little bit more research on ourselves. The other consideration to make with Michael Burry, of course, is that despite being value-minded, he's a very big fan of bouncing in and out of positions. His 13Fs are consistently inconsistent, so there's a decent possibility that, just 45 days later, he's already made significant changes to how the portfolio looked.
Until next time.